So, welcome to another video. My name is Robin, and as per usual, I'm joined by Kirill. And we understand that we uploaded a video about NVIDIA a couple of days ago, but forget about it. Forget about it. AMD is the new hot topic, so we're jumping on AMD. Let's go.
Yes.
So today, what we're going to discuss is what is AMD, what are they doing, recent news on AMD, the foundations or the fundamentals of the company, and then finally we're going to leave you guys with a valuation of AMD.
And while it's actually still hot, we can actually do a comparison between the two because Nvidia and AMD they are just literally just the main two players on the market when it gets to the microchips, right? To the graphics cards. And then now you can actually make a decision if you want to jump on one or the other, and you can see the actual comparison between the two companies. Um, shall we get into it?
Let's go.
All right. So then we just, as per usual, we just open up our lovely spreadsheet and we just plug in the AMD and the USA for the stock exchange. And yeah, what do we got?
Well, let's see. So something that it catches my eye, or caught my eye, is the PE ratio 209. That is insane. I was already thinking it was insane for Nvidia with their 66 PE, but this is just top of the bill.
Yeah, I think this is actually the hottest one I've seen in my life, to be honest, probably, when actually doing some valuations. That's insane.
That's insane. Yeah. Then share buyback, they have been diluting by 10%.
Yeah.
That's
That,
a lot of damage.
yeah.
That's a lot of damage. Let's see. Yeah. So this one is going to be pretty wild. I can already tell.
Yeah.
Their market cap is so they're a lot smaller than Nvidia,
Mm-hmm.
right? Market cap wise.
Yeah, pretty much
Every
almost 10 times smaller, actually. Yeah.
yeah. Okay, if you go down indeed to the company foundation, so they have been growing the revenue, net income, and free cash flow. That's really good. And also their long-term debt is covered by free cash flow, which is really good, of course, because if they want or need to get rid of their debt, they're able to do so.
Yeah.
And then this share dilution thing, that's yeah, I don't know, it's really like for if I would see this, for example, then I would stop here valuing stocks. Like if it would be me, I would just call it quits.
Yeah, and 10% is a lot. And I also check, and you can also see return on invested capital. 4% is very small. It's very small. So there's got to be something wrong in there. If you can see the revenue growth is okay, it's good. There's a check mark in there. It's good to see. But then again, the question comes to the expense part, and then there's something off with the expenses. So we can just dive into it, shall we?
Yeah, actually, let's go.
Yeah. So, yeah, you can see here the income statement, the cash flow statement parts, and the balance sheet as per usual, right? And yeah, what's important in here? High R&D. You can clearly see that, right? So it's quite similar to the NVIDIA, but NVIDIA had a little bit smaller R&D
Yeah,
expense ratio.
some years were more like I think the average was around 38% for Nvidia, and it's
Yeah,
almost 50% for AMD.
yeah, yeah, yeah. This is again makes sense because of the nature of the business, but if you want to have, let's say, a highly competitive company with great competitive advantage, with a great mode, they usually do not require such great R&D, right? So, yeah, there you can clearly see they're runner-up for the first place of NVIDIA. And you can also see the same thing with selling and general expenses, right? So this is also around 30% for the past 5 years. That's quite high. So for them to actually sell their product, they actually need to put a lot of expenses into it, and that's not really the great sign, to be honest. That's
Yeah,
what I would say.
yeah, agreed. Nothing to add there.
Yeah,
Um, and then what happened in 2022 with their depreciation?
that's interesting, right? Because if the depreciation to gross profit margin ratio is so high, meaning that they probably have a lot of inventory in stock, so they probably could not actually get rid of it, and they just had a lot of, let's say, graphics cards piled up, and nobody would buy them. So that's could be a dangerous sign because usually it's sub 10%. So there was something open in 2022. There was something off. And then again, this is something maybe for you guys to dive into further if you want to consider AMD as your potential buy.
Yeah.
So Yeah, there are a couple of red signals, right? We can already sense that. That's not really good to see, to be honest.
Yeah,
Yeah.
agreed. And you can go down and
Yep.
because you already discussed these.
Mm-hmm.
Do you have anything to add for the fund Smith ratios?
To be honest, yes. So you can see that, let's say, the return on invested capital was okay before 2022, right? So as low as 23% and the highs of 49, that's quite good. Apart from maybe some flukes in 2019, so that was COVID and 22. But you could see way better numbers when it gets to gross profit and operating profit margins. To be honest, if a company enjoys great modes, you would definitely see way bigger numbers. So, for example, you would see that in the case of, let's say, Apple or Microsoft or Google, they're gonna have way better margins. So that's yeah, that's definitely not the best, but could be worse, of course, could be worse. But yeah, I'm not already big fan of the company in terms of numbers already. So that's the
Yeah,
thing. Yeah.
agreed. Yeah,
Yeah. But I guess now the question is, yeah, what about the lovely valuation? So if you still
exactly.
want to jump on a stock, yeah, how much would you pay for it?
Exactly. And as per usual, we try to keep it simple. We have a couple of things that you can manipulate. The growth points, PE ratio high and low, required rate of return, discount rate, margin of safety, and the discounted cash flow formula. So how we would get to the endless future growth points, there are two ways of doing this. One way is going to Yahoo Finance, go to AMD, go to analysis, scroll down, and you'll find the analyst estimates for the next 5 years, and they grow at 23%, which is more reserved than NVIDIA.
But still a lot, I would say. That's yeah. I wish all the companies would grow with this kind of pace, to be honest. But yeah, it's still quite a lot.
Yeah, exactly. Well, so just keep it in mind, 23%, and let's see how you would do it, Guru, because you go to stock analysis.
Yeah, so we can either check what it was for the past 5 years, right? So, for example, from the revenue growth perspective, that was 40% for the past 5 years. For the cash flow growth, that was 45, which is still great. That's
It's
actually
high.
very insane.
Yeah.
But if you want to check it for a little bit further down the road, you could check it for longer periods of time, and you can just, for example, just go to stock analysis. For some companies, they do not really show it for longer periods of time, but maybe we can just take it from the revenue perspective. So you just copy paste and just plug it in here for your ease of use, and we can see completely different story, right? Now it's twice as less. So
Yeah.
if you want to be reserved, you could probably keep it to, let's say, maybe 15%, right? If you wanted, again, the unicorn in the great prospects kind of world for AMD to be envisioned in your valuation, you could probably keep it at 30%. Shall we actually do the same thing with as we did with NVIDIA? Shall we keep it quite high and then see where we end
Yeah.
up? Yeah,
Let's just keep it at 20%.
20. But what was
20.
it? Yeah,
It's
let's do
20.
20. Yeah, let's do 20. Yep.
Okay.
For PE ratio,
You're
yes.
gonna be insane.
Yeah, you can see like some great flukes in the company. So then we will just go, for example, for macro trends to see a little bit of a longer timeline. But yeah, it's as low as 0, which probably makes sense when the company was not making money, probably. But then goes as high as 1300. Okay, this is yeah, this is the biggest. Never mind. We thought AMD had the bigger P ratio. No. um but yeah, like if we, let's say, disregard this fluke, right? That would
Yeah,
be
just remove the outlier for 1 second.
yeah, because that's just a little bit too outrageous. So let's say the lows of 30 and the highs of 100. Shall we keep 100?
Yeah, for sure.
Because then we're gonna end up somewhere in the ballpark of 65. That's that's something what Nvidia also has, right? So you kind of pay a premium for the growing company, for the growing industry, yada yada yada. So yeah, okay. Now it's time for your mantra, I guess.
Yes, so we have these three other things that we can manipulate: the required rate of return, We normally keep it at 12%. The reason being that if you put your money in an index fund or an ETF, you would expect between 7 and 10% yearly. But because you're stock picking, you want some higher percentage. So we normally keep this around 12%, but you can also increase it, of course, if you want to have a better company or at least something that will give you higher returns, then you can up this. You'll have a harder time finding good deals, but that is of course then what you're after.
Yeah.
For the discount rate, we always keep this at 12%. And for the margin of safety, this depends on a couple of factors, how much you know about the company and the market and the macroeconomics. Also, for example, with your age. So when you are in your 20s and you invest 20K in AMD and you lose it all, it is not the end of the world. You still have like 40 years at least to make up for those losses. And the other way around works as well, right? So when you're older, you probably don't want to make those risky bets because yeah, you're gonna retire soon and you need that capital. And then for the discount cash flow formula, we can discount it for a couple of years. Yeah, we discussed it with NVIDIA. We did it for 5 and 2 years. So let's do something similar. So let's keep all these metrics. So 12% for required rate of return, 30 for margin of safety, and 5 years for the discount cash flow formula.
Yeah.
And what do we get?
Yeah, a little bit of outrageous valuation, to be honest.
Mhm.
If we're talking about AMD, how it's supposed to be priced in, we're talking about $60 probably, and now it's more than a double than that, and more triple,
Almost
almost
triple.
triple. Yeah, exactly. So it's okay. Let's like even play around with it. So if we assume, let's say, 10 years, and if we, for example, even say, okay, if the analysts say can grow next year 50%, okay, screw that. Let's do 35. Still not there. 50. Okay, it's there. But then imagine the company has to grow 50% every year for the upcoming 5 years.
With the average PE ratio of 65.
With the average ratio of 55. Thank you. 65, yes. Is that outrageous? Absolutely. Is
Yeah.
it worth paying the price for the second runner-up company in the chip manufacturing business? I'm not sure, especially given the fact that the US companies cannot trade anymore with China. And AMD is also lacking behind in any additional, let's say, industries. For example, when we discussed with NVIDIA, they're actually doing great with AI, and they are doing great with the crypto mining space, and where AMD is kind of lagging behind. That's definitely not a buy in my eyes, for sure.
So now you also have a good view, right? You can go back to our previous video on NVIDIA and you can check out that valuation. And now basically you can see the whole process of in a similar industry with similar products, what price do you want to pay for what kind of value? And I think there's a clear winner if you would invest in one of these companies. But then again, none of this is any financial advice. Do your own due diligence. So we don't know a lot, at least personally, I don't know a lot about these ships. Maybe you know a lot about this industry, and you might even have different assumptions than we do. It could also be the other way around that you know even less than us, which is also, of course, a reason not to jump on any of this. So do your own due diligence. Um, and yeah, as Kirill will probably also mention, use our sheet as a tool.
No.
But where do we get the sheet, Kirill?
Yes, very good question. I love your questions every single video. But you can just go to our website, 930.com. The link, of course, is going to be in the description. And as always, for now, while we are still developing our web app, we just want to grow the community, and that's why we put the price of only €1. And that also allows you to secure your seat in the web app. So you're also going to get the web app for free when it's developed, and we're of course going to keep you up to date every single week or whenever the videos are going to be launched. So yeah, quick and dirty, stay tuned. Leave a like, leave a dislike, leave a comment what you think about NVIDIA, what you think about AMD, of course. And yeah, please subscribe if you like our content and if you want more of it in the future.
And with that said, have a nice day. I see you guys in the next video.